Welcome back. Robots are racing to America, and Rockwell Automation is playing a part. The company planning a $2 billion investment over the next 5 years to improve facilities and productivity. The company also recently expanded production of autonomous mobile robots at the company's headquarters in Milwaukee, Wisconsin. The Auto brand robots are currently made in Canada. Those new bots will roll out by November. Joining me now is the CEO of Rockwell Automation, Blake Moret. Blake, great to have you this morning. Thank you so much for being here. And I want to get your take on where we are in this cycle. We see President Trump and his efforts to get lots of manufacturing, American companies to start focusing on making it in America. And of course, Rockwell Automation is a critical element in all of this. Would you expect that we are entering a new upcycle, or where are we, do you think, in terms of your cycle?
We do think that we're entering into a period where we're going to see greater capital investment. Some of those investments have been a little bit subdued here recently as people are looking for more certainty with respect to things like tariffs and tax. But with the tax bill in place and with progress on tariffs, we think that we're heading in the right direction.
And what are you seeing in terms of capital investment from customers in that regard?
Right now, we're seeing a higher level of scrutiny on the business cases by manufacturers across various vertical segments. So they're looking to be sure that they understand the costs of their new projects, that the demand is still intact, and that they can manage the general risk. But projects are being greenlit, and we did secure a number of large projects across multiple industries in the last quarter.
Well, you've always been, or for some time, been a high R&D spender. Does artificial intelligence and this AI wave across the country trigger is that an accelerant for business, do you think? And how significant is it?
I think it's very significant. We certainly understand all the benefits in the office part of enterprises, whether it's helping with financial transactions, forecasting, pricing. But when you think about the manufacturing side of businesses, it can really help simplify the whole process of designing systems and operating them and maintaining them, from vision-based sensors fortified with artificial intelligence to mobile robots that you spoke about, to demand planning software.
Yeah, it's a great point, and I know increasingly robots are being used. I guess, what are you expecting for 2026 in terms of business? You mentioned the tax bill now putting clarity in place. President Trump, in pushing that big, beautiful bill, made sure that the tax cuts would be permanent, also ensured that businesses would have new expensing options in the tax code. How significant was that, do you think, for customers and for Rockwell?
So I think certain provisions of the tax bill are going to be very helpful for manufacturers in America, particularly small and medium-sized manufacturers. So the provisions like bonus depreciation, those are things that we hear through the National Association of Manufacturers from the many members there, how important that is. And so I think it is going to spur additional investment.
And of course, you reported strong third quarter earnings yesterday with more than $2.1 billion in revenue, earnings per share, $2.82 a share. Blake, walk us through some of the markets, because the end markets look like e-commerce and warehouse were up, but you also had decelerations as well. Where do you see the growth in terms of sectors right now?
Sure. So we, in general, we returned to year-over-year sales growth, which was a great thing. When you think about automotive, we saw year-over-year growth. Some of the capital investments remain subdued in automotive, but we have such a huge installed base. There's a lot of maintenance spending, and they are making upgrades to many of their existing lines. Warehouse automation and e-commerce continues to spend. New fulfillment centers, production logistics in that sector drove very high double-digit growth. Food and beverage was a strong performer for us in the quarter, and that's our single biggest vertical. And then pharmaceuticals has a number of very large projects announced. On the other side, let's say stagnant commodity prices are suppressing some spend in areas like chemical, maybe metals would be another example, and a little bit in oil and gas.
I mean, do you feel that there has been a change in terms of the sentiment from the business community as a result of these new policies coming out of the administration?
I think the tax bill was met with a lot of support, giving additional certainty to some very important provisions of the tax bill. I think that tariffs seem to be moving in the right direction. We're not done yet, and we're looking forward to a continued move towards certainty, which will be a big factor in releasing a lot of that capital spending.
Yeah, I mean, I speak with CEOs and money managers all the time, and I keep hearing very bullish sentiment and bullish commentary, and yet we're talking about an economy potentially that is slowing. That's why you've got the board of the Federal Reserve talking about the need for rate cuts, now joining President Trump in terms of pushing the chairman to cut rates. Blake, what about you in terms of the bullishness in this economy? How would you assess the macro story right now, Blake?
Well, look, the single most important factor that I look at is unemployment, and unemployment remaining low, 4.1, 4.2%. That's objectively a low number for U.S. unemployment, and I think that's the single most important figure. It means that consumer demand is largely intact. I think we're voting with our wallet in making the investment that we announced yesterday, with the U.S. being the largest beneficiary. We think there's a long runway for investment in technology as we increase manufacturing and couple that with an enabled and engaged workforce.
It was a big announcement, $2 billion to be spent on capex and digitization projects over the next 5 years. How specifically are you expecting to allocate that?
So the largest portion of that is going to be capex versus opex. There's not a tremendous amount of incremental OPEX, but we will be making investment in our talent, both upskilling our existing talent as well as hiring. And in our plants, we expect to be able to apply the very same technologies that we provide for customers in our own facilities. And we, of course, have seen the benefits in our own plants, and now we're going to do that at scale.
And you've been investing really in the U.S. and across the world for some time. Are you doing a new focus on the United States as opposed to elsewhere?
The U.S. is our most important market, and so that is going to garner the largest share of those investments. We have large facilities in Ohio and Wisconsin, and all of those are going to benefit from these investments.
And is this a larger secular trend, do you think? What's your timing on this?
So we're already well underway in productivity programs that has helped us, with the margin expansion that we've enjoyed this year and we'll see in the coming years. This is really about that next phase after we get to the level of objectives that we've talked to investors about. What comes next is what we're asked a lot, and this is what comes next. So we think that the trend for applying technology for automation and digital transformation is going to be in even greater demand. The U.S. has relatively high labor costs, and so the way that manufacturers in the U.S. compete and win is to make the most of that labor by coupling it with the technology such as we have. All
right, such an important announcement on capex. Blake, great to have you this morning. We'll be watching the company. Thanks so much.
Thank you.
All right, Blake Moret is the CEO at Rockwell Automation.